So the broad market essentially spinning its wheels, clearly waiting for Microsoft and Tesla to report their quarterly results after the bell. I think they also lost a little bit of that oomph, if you will, when reports yesterday that the stimulus talks were going poorly. I want to bring in three experts, three of my favorites, to go over a whole bunch of topics here. Kaltbaum Capital Management President, Fox Business contributor Gary Kaltbaum, Bull Tick Capital Markets Chief Strategist Kathryn Rooney Vera, Heritage Capital's Paul Schatz. Gary, we're sort of watching this market. It's quiet on the surface, but there is excitement. I know you like, for instance, technology beyond those names we talk about. AMD is breaking out. Siemens are up. Software, they look great. IGV is up. Those are the areas that seem to do well, even as the overall market continues to sort of move sideways.
Well, my take on the tech is they've had a big run and probably a little bit of resting here. I'll tell you what I am seeing, which I'm starting to love, is the broadening out of the market. Housing and housing related, Home Depot and Lowe's and Masco's and Sherwin-Williams moving into new high ground. Industrials, lithium motors used in new cars. So I think the market is actually broadening out here quietly, which is fine by me, and that augurs well going forward. We will get pullbacks, we will get scare days, but so far all pullbacks have been nominal, short-lived, and until that changes, I think you go along with what you're saying.
You know, Kathryn, on June 8th, June 9th, the S&P had 191 winners, and then we've pulled back, and we've yet to get back there. To Gary's point, this stealth broadening of the rally, I think, is great. Doesn't look good necessarily because these indices are moved by the big mega names. Is that sort of what you think is going on here? And what does it mean for the rally going forward?
Yeah, the broadening out of the market is a positive sign, but let's face facts. There's 5 stocks, the big 5 tech stocks, that have taken the markets higher exclusively just because of those 5 names since 2017. And my concern, Charles, something that we haven't discussed yet, is July 27th, we have some of the CEOs from some of the top biggest tech names appearing on Capitol Hill. We are in an election year with a very possible chance of a change in power to the Democratic side. So what will that mean for antitrust and regulatory issues for these big names, 5 of which comprise 25% of the S&P 500? So yeah, let's hope and let's pray for that broadening out of the markets, Charles. But the fact is that there are 5 big name tech stocks that comprise a quarter of the S&P 500 market cap. If those drop, whether it be because of regulatory issues, political issues, the government pouncing on these giants, then markets take a swoon.
Markets can take a swoon, but we always look beneath and to what's the names that are up and down. Real quick, Paul, your sense, because I feel like this is sort of a coiled spring, and after the first 6 months where we set all kinds of records of volatility, it feels odd, but it also feels ominous for others.
Mm-hmm. Well, look, the VIX is 25 right now, down from above 80, so clearly volatility has come in so much. The more volatility drops, the more the VIX goes down, the higher stocks can go. I'll say this, in the short term, I think we have the biggest chance for a pullback as we've seen since the bull market launched on March 23rd. I would not be surprised to see the Dow sub 25,000 in the next 6 weeks or so. So I think it's certainly an opportunity to prune here and find things that you really love to own.
The Fed will take care of that.
All right, well, in the meantime, the market, in the meantime, if you looked all morning, it was really indecisive, right? And then we got news that Operation Warp Speed inked their largest deal yet. Pfizer, almost $2 billion, 100 doses of their experimental COVID-19 vaccine. Now, these announcements, let's face it, they've actually given the market a pretty good boost over the last couple of weeks. But could it be a double-edged sword if the vaccine does not materialize in a few months? I mean, Kathryn, there's no doubt that the market is building this in. The flip side of that, though, some of these names look very attractive as investments. Your thoughts on just how are we putting too much hope into this?
I think we are, Charles. I think this comes down to the Fed. The Fed is widening out its breadth of asset purchases and increasing them in size. If the market takes a swoon, the Fed will not allow it to make new lows. So you can expect the Fed to broaden out its purchases of high-yield bonds, maybe move in even to equities to preclude new lows in the S&P 500. The equity market are priced. I think a vaccine is in the offing. I don't think it's going to move too much. If we do not get the stimuli that the markets are currently priced in 100%, which means additional Fed purchases, which means an extension of the $600 top off by the end of this month on unemployment benefits, which means additional trillions of dollars in the fiscal deficit, then I think the market could drop. But it's really all about the stimuli, both from the federal government and from the all-powerful Federal Reserve.
Now, speaking of COVID, though, in the meantime, things have changed, right? We saw Thermo Fisher come out with pretty strong earnings. We saw U.S. home sales increase. In fact, the largest monthly increase with the June number. It would have been higher if it wasn't for the short supply. And here's the thing, Paul. So, and Gary talked about some of these stocks earlier. Stocks associated with home building. Home builders are through the roof. Carpet makers are through the roof. Appliances are through the roof. Lumber is through the roof. Home Depot had a great number. So coronavirus has actually changed the way we're investing. What are some of the adjustments that you've made?
Well, first, I've divided, and I agree, Gary laid out some of the very popular names. Just like with the vaccine stocks, a lot of the new era stocks, if you will, the pandemic stocks have gone almost vertical. So it depends on what lens you're going to wear to buy them. If you're a shorter term person, you can't buy a stock that's appreciated 75 to 100% in a couple of months. But to your question about how we pivoted, I continue to make my list of haves and have-nots. I don't want to overload any of the portfolios with haves or have-nots. I think in the strength, you compare back to have-nots because they're most of them are over-leveraged.
Are there any names you're buying, though, Paul? I mean, have you made any changes? Okay, I mean, things have changed, right? So, used car sales are through the roof. Do you own any of those? What do you own? What have you bought or have you sold?
So we recently trimmed Apple, we recently trimmed Amazon, and we recently trimmed Alibaba. On the backside of that, and we recently trimmed WPX, which is in the shale space in Texas. I bought Decker Outdoors. We bought Wendy's. I bought things that I think, even if I'm wrong, which certainly I will be, I'm not going to get hurt too much. But I cannot jump on board. So we own a couple of the home builders, but I didn't buy them yesterday. Right. And we even bought Berkshire Hathaway as a more contrarian play.
That is a contrarian play. Whoever thought we'd say that? Hey, Gary, I want to give you a shout out because 2 weeks ago you said buy gold. Gold is looking phenomenal. I think silver's looking better. Silver breaking out. It could double. Gold's right near its all-time high. Silver could still double to get to its all-time high. People are asking more and more, should these be places to be? We talk about the Fed. We talk about money printing. We talk about debt all the time. What do you think?
Shorter term, they can pull back, but I think they're going higher. Unfortunately, our currency's heading south because this man running the central bank, I'll be careful about what I say, is just too easy with the money. And I think Kevin said it best. If the market drops 5%, he'll start buying stocks, and I think that's good for gold. And silver's gone in fuego here, so I think this is a move that's going for a while. And I do have to mention, yesterday, for the first time in eons, I bought a little bit of the oil patch. In that it looks like they're trying to put in some sort of low. It's under-owned, under-loved, under-leveraged. So if oil prices started to tick up, I think it'll do well. I'll keep close stops just in case. Right. But for me, 15% of my assets is in gold stocks right now. Quite happy. Not adding just yet, but on pullbacks I will add because I think they got a ways to go based on what central banks are doing around the globe.
I gave a silver name yesterday on this show, and that's up 8% today. Kathryn, I got less than a minute to go. So Gary and Paul already expressing, looking at value, looking at things that are oversold, in part because it helps your risk reward, right? You limit the downside. Are you looking at any opportunities like that? Because these unloved names, they look attractive to a lot of people.
Yeah, sure. And I'll add financials to that. I love the gold trade. I'm out of consensus. I think inflation will become a pernicious issue over the course of the next 2 to 3 years. So we need to protect our portfolios against that eventuality. So that means buying tips, buying gold, buying uncorrelated assets such as private equities. But I'll add one thing to the conversation, which is the fallen angel bonds. Ford, we recommended, I think on your program about a month and a half ago, it's up 20% because the Fed is buying it. The Fed is going to continue to expand into the high yield space. There are fallen fallen angel bonds that have lost their investment grade rating over the past 2 months. Those names are going to be in the mix. That's one of my firm convictions. So look at fallen angel bonds. Those are bonds that have just lost their investment grade rating, and the Fed is going to start buying. Nice yield, nice juicy yield between 7.5%, 8%.
Well, you had me at nice juicy yields. Kathryn, Gary, Paul, great stuff. Thank you all very much. Appreciate it.